Hey everyone, welcome back to Corporate Decoder, the place where we unravel the secrets hidden within those seemingly dry corporate filings. Today we've got a real spicy one from GB Financial Holdings Incorporated, and let's just say they've been busy cooking up something that could significantly change their financial recipe. So, what is the big news? GB Financial Holdings Inc., the parent company for GBank, just announced they've successfully raised a cool $11 million by selling what they call subordinated notes. Now, that might sound a bit technical, but think of it like this: they're borrowing money, but in a way that is a bit riskier for the lender, and thus they usually get a higher interest rate. GB Financial is offering a pretty attractive 7.25% fixed rate for the first 5 years, and then it floats, meaning it can go up or down with market rates. But with a decent chunk added on top, they need this money for general corporate purposes, which often includes paying down their existing debts. A common move for many companies looking to clean up their balance sheet. These notes are due in 2036, a good long time from now, giving the company a lot of breathing room. The payment structure is interesting too. For the first 5 years, it is a fixed 7.25% paid twice a year. After that, the interest rate will actually float tied to a key market rate called SOFR, plus a significant spread of 382 basis points, which is 3.82%. This means if interest rates go up, their interest payments will too. They can also call these notes back, meaning they can pay them off early, but only under specific conditions before 2031. After January 2031, they have the option to redeem them, paying back the principal plus any accrued interest. Crucially, the people who bought these notes don't get to demand their money back early. These notes are also unsecured and subordinate, meaning if the company ever gets into serious financial trouble, the people holding these notes will be among the last to get paid back after other debts are settled. The way they sold these notes is also noteworthy. They did it through a private placement, meaning they didn't offer them to the general public on a stock exchange. Instead, they sold them directly to specific institutional investors who are considered accredited investors or qualified institutional buyers. This is usually done to speed up the process and avoid the lengthy registration requirements that come with a public offering. The company is counting on these types of investors to understand the risks involved. Now, looking at the bigger picture here, GB Financial Holdings Inc. is essentially strengthening its capital base by taking on new debt. They've also stated that these notes are intended to qualify as Tier 2 capital, which is important for banks as it helps them meet regulatory requirements. This suggests they are proactively managing their financial health and aiming to comply with banking regulations. It is a strategic move to ensure they have the financial muscle to operate and perhaps grow. The filing also includes a cautionary note about forward-looking statements, reminding us that while they expect certain outcomes, actual results can vary due to the inherent risks and uncertainties in the business world. They've pointed to their prospectus from April 2025 for a deeper dive into these risks, which is a good reminder to always look beyond just the immediate announcement. Alright, let's wrap this up with my take. GB Financial Holdings Inc. is making a deliberate move to improve its financial structure and meet regulatory demands. Raising $11 million, especially at a time when interest rates can be volatile, shows a level of confidence from both the company and the investors who participated. The subordinated nature of these notes means they're a bit more responsible for the company's financial stability, but the attractive interest rate reflects that. The real question is how they will use these funds beyond just refinancing existing debt. Will this fresh capital unlock new growth opportunities or simply shore up existing operations? The next few filings will likely give us a clearer picture of the impact of this strategic financial maneuver. What is your take on this debt issuance? Do you think it is a smart move for GB Financial Holdings Inc.? Or does it signal underlying weaknesses? Let me know your thoughts in the comments below. If you found this breakdown useful, please give this video a thumbs up and subscribe to Corporate Decoder for more insights into the world of finance. And hey, don't forget to join our Discord community, linked in the description, where we get into even more in-depth discussions. Thanks for watching, and I'll see you in the next one.